Hi guys, it's Stock Curry, and get ready for the most important week of the year. Not only do we have earnings from the biggest companies, we also have a Fed meeting, and we have our Q2 GDP, which could officially put us into a recession. So let's get into it! This week is the most important week of the year, with the Fed meeting, earnings, and economic data all coming out in a single week. On Tuesday and Wednesday, the Fed is meeting, and they are widely expected to do a 75 basis point rate hike. That's 0.75%. Now, if they do on Wednesday announce a 75 basis point rate hike, then we can expect the markets to go up as they breathe a sigh of relief and knowing what the Fed is going to do. Now, after this meeting, the Fed is widely expected to slow down the rate of their rate hikes. This is expected to be the last 75 basis point rate hike this year. The day after the Fed announces how much they're raising interest rates by, on Thursday, we have the US GDP for Q2. And there's a very good chance it could be negative again. But does this actually mean that we're in a recession if we get our second quarter of negative GDP? Well, yes and no. You see, by widely accepted standards, 2 quarters of negative GDP means that we are in a recession. However, that would not put us into an official recession. In order for the United States to be in an official recession, economists have to get together. They have to talk about how the economy is actually going, how the job market is, how wage growth is, how company earnings are. They have to look at everything combined, and they have to officially declare a recession. You might recall how in 2008, an official recession was not declared until almost 2009, and by the time the official recession was declared, we had already been in a recession for over a year. So there's not a very high chance that economists are going to declare an official recession even if Q2 GDP is negative. And the main reason for that is because jobs and wage growth remain quite strong. There's still 1.9 jobs for every unemployed person in the United States. We still have one of the lowest unemployments in history. And because of that, economists are very unlikely to officially declare us in a recession. So don't panic if Q2 GDP is negative on Thursday, because it does not mean that we are officially in a recession yet. That may come down the line at some unknown random point, but not yet. Now, despite all of this, the Fed meeting on Wednesday, which is huge news, the Q2 GDP, which could, by some standards, put us into a recession, even if it's not official, really big news. And then on top of all that, all the ups and downs from that are also going to be hit by earnings, because we have the biggest companies in the world reporting earnings this week. This week alone, 30% of the weight of the S&P 500 will report. So far, these very weak earnings aren't phasing investors, and stocks are actually rising because the companies are posting better than feared results. Remember, expectations are in the gutter right now. People are basically expecting companies to lose revenue, no longer be profitable, approach bankruptcy. So anything better than complete and total disaster is causing stocks to go up. So even if earnings are terrible, we could still see stocks go up this week. And it's going to be really hard to figure out, well, we got this earning on Monday, that one on Tuesday, that one on Wednesday, that one on Thursday, that one on Friday, but then the Fed also, and then the GDP also, and it's going to be a nightmare. This week, nobody in the entire world can possibly predict what is going to happen this week, and I do expect major volatility. If we're going to get weeks or days where the stock market moves up or down more than 5% in a single day, this is the week where it could happen. So stay on your toes, because it's about to get wild and crazy. let's get into the earnings that are coming out this week. Monday is nothing major. You can think of Monday as the calm before the storm. But Tuesday gets started with a bang. In the morning, we have UPS. Now, UPS is more of a Dow stock, but it usually gives people some good information on how the overall consumer side of business is, how much people are ordering retail products that are then shipped through UPS. Last quarter, UPS actually beat earnings. They were doing really good, and it brought the market up. But again, that's going to be short-lived because after the close, we have Alphabet, which is Google, and Microsoft, and Visa. Now, these earnings, especially Microsoft and Alphabet, are going to move the market massively on Wednesday. At least Wednesday morning and the pre-market Wednesday. And then later in the day on Wednesday, the Fed will come out and speak, and that'll move the market one way or the other. And if these two combine, so let's say that the earnings come out and they're really, really bad, and then the Fed comes out and they do a 1% interest rate hike, and those two things combine, that could cause the market to go down significantly, possibly more than 5% on Wednesday. On the flip side, though, if the earnings come out really good and we see the stock market rise significantly Wednesday morning, and then the Fed comes out and does a 50 basis point rate hike or 75 basis point rate hike, we could see the markets rise even more on Wednesday, and we could see the market go up more than 5% on Wednesday. Again, this will be short-lived because look what happens Wednesday after the close. We have Meta and Ford reporting. Now, both of these companies are a little bit beat down. They don't have the same impact on the market that they once did. But keep in mind that Meta is one of the FANG stocks. F was Facebook before they changed the name to Meta, so I guess it's not FANG anymore. Maybe it's Mang. I don't know. Anyway, the fact is that Meta is still a pretty big company, and they're still going to have a pretty big impact, even if it's not as big of an impact as, say, Amazon or Microsoft is. Still a major impact. However, then we get into Thursday, and that's where things get crazy again. So Thursday morning, we get the GDP numbers, which could massively move the markets. And then after the close, we have Apple and Amazon. And once again, on Thursday, in the morning and the after hours, if the GDP numbers come out and they're positive, meaning there's no chance of a recession, and on top of that, Apple and Amazon report good earnings, between the day and the after hours, we could see the NASDAQ rise 5%. I would not be surprised. Now, if they're both bad, let's say GDP comes in negative and there's fears of a recession, and on top of that, Apple and Amazon report bad earnings, and that tanks the market even more, we could see the NASDAQ drop more than 5%. So, in a worst case scenario, if all the news is bad on Wednesday and all the news is bad on Thursday, those 2 days combined, we could see the market drop 10% or more in those 2 days. On the flip side, if all of the news is good and all the news is good Wednesday and Thursday, we could see the market rise more than 10% in those 2 days alone. Then, of course, getting into Friday, the Apple and Amazon earnings are going to affect the market significantly on Friday as well. So, altogether, Monday is your calm before the storm, which, by the way, you're going to get some alternative analysis on this Monday at 7 p.m. I will be live with Stocks with Josh and Larry Jones on Stocks with Josh channel. So just go to YouTube and Google Stocks with Josh. You'll find it. And I will be live over there, and you will get my opinion as well as Josh's opinion and Larry's opinion on what this week is going to look like. I'll just tell you right now, I have no clue, but I would not be surprised to see a move up or down more than 10% by the time this week is done. I would not be surprised at all. Monday is the calm, and then Tuesday, Wednesday, Thursday, Friday, crazy madness! Oh my gosh, it's going to be fun! Okay, that's all I got for you guys. I hope you enjoyed this video. Don't forget, I have a few more slots left in the VIP Discord. I have about 300 slots left in there. Once the 300 slots are filled, there will be no more signups. I am closing it, locking it out, and that's it. After that, we are moving to a new system. You won't be able to sign up with the monthly membership anymore. So if you want to take advantage of that, you want to know everything we're buying and selling, we made a 90% profit on Tesla last week, and we'll probably try to make some more money this week with these earnings. If you want to come join us in the VIP Discord, you can sign up at stockcurry.vip/getvip. That's stockcurry.vip/getvip. And if you missed the video from yesterday, I covered the 7 rules Warren Buffett followed in order to become a billionaire in the stock market. I highly recommend you go watch that video because it can make you a ton of money if you will follow the 7 rules that are laid out in the video I uploaded Saturday. I'll put a link to that video right here for you guys. Just click on that video right there and you can watch the 7 rules Warren Buffett follows. I hope you have a lot of success trading. Don't forget to hit the like button, subscribe, and hit the notification bell and click all. And I will see you Monday at 7 p.m. on Stocks with Josh's channel.